Hi, thanks so much for tuning in. You're watching Stocks in Focus. This is VK Prime. My name is Alex Matthew. And quite a few stocks to talk about today, and they're all buzzing in trade. You have the benchmark index that is above 19,500 at this juncture and has reached a new lifetime high. And the IT index is the one that is performing the best among the sectoral indices right now. We'll start with that conversation right on the at the start. Rahul Shah, the Senior Vice President and Advisory Leader at PCG, is joining in. Rahul, thanks so much for taking the time and good morning to you. Just at the start, maybe about an hour and a half back, you had HCLTech that was the worst performer. TCS was positive, but not where it is right now, with gains of about 3%. Something seems to have changed in the pack there, but the results are disappointing. How would you look at the pack?
Hi, good morning. I think the numbers were pretty. I think what was expected by Street were in line with what the Street was expecting. If you talk about DCS, I think quarter and quarter flat and year-on-year degrowth plus decline in margin by 130 basis point. So I think all these things were dampener and for the TCS perspective, and I think the way the UV environment and the weakening of economic environment, which looks like for the IT companies, I think which was warranted in last two quarters also, and last quarter also, I think this looks very clear. And so in this quarter also, this is the same thing which is reflecting. And I think only thing is either the valuation perspective. So I think 24 times earnings. So I think risk versus reward is quite favorable in terms of TCS. I think and this kind of a stock in IT space, I think we know that I think 1 year could be a challenging for the companies like this. So I think the second half would be better for this IT companies. That is what we expect. So maybe this quarter also could be a soft. And then if you look at the currency prices were quite stable in last quarter. So I think going forward, I think one should look at, if you have an investor and if you would like to hold for a longer term perspective, then but I think this is the company, so you should buy. So and then it could be a time-wise correction, and maybe the way the markets have been last 2 months, I think. So I think IT stocks, by and large, in a large cap space, have fairly underperformed post their Q1 results. So I think. Q4 results, if you look at it, after post Q4 results, I think we saw fairly momentum mid-cap IT stocks and large-cap IT stocks were just static. And I think, again, starting with this number, I think the numbers are pretty okay. So I think if you're looking for a longer-term horizon and as an allocation in a portfolio, then TCS is a must. Secondly, I think HCL numbers also, if you look at the numbers as per expected, were according to me, I think below estimates if you look at it. And I think more or less is factored in at this price. And if you look at, again, the valuation comfort gives that I think the risk versus reward would be lower. So I think 19 times earnings, I don't think so. It's expensive or maybe in way the IT companies have delivered in past. So for HCL also, I think if you're a longer term investor, then yes, one should start allocating some kind of allocation in your portfolio in large cap IT stocks.
Notwithstanding the pop that we're seeing in trade today, these stocks have, as you pointed out, underperformed in the last couple of weeks at least. Let's talk about metals though. And this is the reason I picked it is one, it's buzzing in trade today, but also one would expect with yesterday's inflation print in the US that the Fed tightening could end as early as this month. And if that's the case, then the expectation for the underlying commodities to start showing a bit of up move, or maybe we've seen the bottom of the prices for those underlying commodities, metals, would bode well for these companies. So how do you rate them in terms of the outlook for fundamentals going forward? And where are valuations right now, according to you? As in, are they comfortable? Which one would you pick?
So I think if you look at, as you rightly pointed out, once the tightening is, I think looks like, which has suggested, I think looks like it's over by this month and or so. So I think this could be the last one which they've been talking about. So I think obviously the biggest beneficiary if we talk is obviously his census metals. So I think both metal stocks, if you look at it, I think ferrous, non-ferrous, both will do very well. in terms of this thing. So my sense is, I think steel stocks. I think if you're seeing the domestic kind of infrastructure story, especially we've seen there's an road infra and railways which is building it up and the spend which is done. So I think we've already seen cement as a sector done very well in last 2 3 months. So I think followed by I think the metals. So I think this will lead metal stocks to rally. So I feel Tata Steel and JSW Steel, obviously Jindal Steel and Power, all three. So I think GSPL is one of the best performing stock if we look at it in this entire space, and stock is almost at a lifetime high vis-a-vis other new stocks. So I think one should create a basket of all three stocks, GSPL, JSW Steel, Tata Steel. So looks very attractive and continue to hold on. So I feel there could be a good upside in this stocks. And if you've seen the dollar index hitting again low, so all these things factors augur well for all the metal stocks. So my sense is I think one should create a basket of all these three and hold on.
Okay, so a number of frontline stocks hitting all-time highs or 52-week highs at the very least, Rahul. One of them is Bajaj Auto, and we've seen it gain over 5% in the month so far itself, and that's probably sentimental boost on account of its tie-up with Triumph and the kind of booking numbers that it has gotten. But in terms of the overall business, it's probably not going to move the needle too much, right? If you think about it, would you say that it is still attractive at this juncture? If somebody's holding, should you take money off the table?
So I think 2 3 things for the Bajaj Auto. One is obviously post their premium launch. I think we've seen some kind of momentum creating. Second, I think there could be still year on year, this could be a day zero was low. So I think this year could see a good traction. Secondly, I think also if we look at it, I think there are a lot of space in terms of an EV that could create some more markets for there. And I think all these three factors as well for Bajaj Auto. But looking at, I think, the valuation and the recent run-up in the prices. So I think, again, 18 times earnings. So I don't think so there's some more money to be made. Limited upside looks like for your, and obviously one should look post the quarterly results. But looking at these valuations and looking at it, so I think there is a limited upside in Bajaj Auto. I would prefer other auto stocks vis-a-vis this thing, Bajaj Auto from this levels.
All right. Another counter that has run up very significantly just in this month is Reliance Industries, and that's added quite a bit of strength to the benchmark as well. Rahul, 9% I was looking at it this morning in just this month, which is incredible for a stock this size. I guess in the run-up to the JFS demerger and the listing, there's a lot of interest in this stock. But for somebody that's holding on to this stock, is this an opportunity, according to you, to book some amount of profits and re-enter if there is an opportunity down the road? Or do you think hold is the call that you should take?
I think I would advise to continue to hold on to Reliance. I think a lot of value still left on the table, I think, the way if we look at it. So I don't think so. There is something that one should look at booking profit at this. I think all the businesses, what they are into, I think, except for oil and gas, I think we should review it most numbers. I think rest all businesses, I think, are doing quite well. So I think there could be a lot of money post demerger investor could make from here. So I would advise them to hold on. This 9-10% is just a number. I think if you look at with markets being a lifetime high, so I don't think so that large cap stocks which have underperformed vis-a-vis the index will stay here. So they will obviously tend to outperform from there. So I would recommend to hold on to Reliance, and there's some more money on to the table.
Yeah, JFS also is something to bear in mind, right? The record date has been set at 20th. So perhaps at least till the 20th you should hold, because you're getting a financial services company for every stock that you hold, every share that you hold in Reliance, you get one share in JFS. Let's talk about Patanjali Foods. The offer for sale by the promoter. How do you rate this counter? Do you have any specific recommendations here?
Alex, we don't cover Patanjali closely, so it would be difficult to comment on this Patanjali at this stage.
Okay, fine. All right. Let's move on then to SpiceJet. And here too, you're seeing significant commitment of funds or capital by the promoter. And he has done this in the past, Rahul. This is a situation where the company has been bailed out in the past. But at this juncture, you have flagging market share You have several problems that the airline is contending with, legal issues that they're contending with, certain outgoes in terms of payment to the previous promoter. Things aren't looking really good for SpiceJet. So what would you say with regard to this vote of confidence from the promoter?
So I think again we don't cover, but whatever I can understand and what I can throw some light on SpiceJet. So I think if we look at it as an aviation as an industry as a whole, so I think very few players left now. Obviously, we saw some problem in Go Air, and then we saw recently I think SpiceJet also is going through the turbulence times in the last couple of quarters. I think so. I think obviously the commitment by which is come up right now, so by the promoters. So I think this will augur well for near term. So I think basic thing which all this companies require is a huge cash. So I think this is what which has happened to SpiceJet as well. So I think once this is done, this is sorted, then I don't think so. Because as a travel and tourism as a whole, and if you look at the way the air traffic has significantly, which has moved up post COVID, and we've reached above the pre-COVID levels as well. So I think there's a lot of room for aviation to grow from here. So my sense is that this overall thing looks quite positive, but I think still looks to understand more how it's going to be a future, and that is going to be funded through for operation.
Do you have coverage on Interglobe Aviation?
Yes, we do cover Interglobe Aviation.
What's a call there? And, the reason I'm asking is because we're talking about SpiceJet, and if you have a positive call on Interglobe, maybe our viewers should know.
So we are positive on entire aviation as a sector, and obviously in that space, I think a listed entity, what we like is obviously Interglobe Aviation. I think if you look at the crude prices, which are softer, and it looks like they remain at this point of time same. The next couple of quarters looks like that expectation is. So I think if the volatility of the crude is less, and then obviously the air traffic is obviously, as I mentioned, is continues on a rise. So my sense is I think they will continue to do well. So and I think if an investor have to allocate some money on the table on this thing, and stocks like this industry, then I think they have a limited choice. So I think on a listed entity with a cleaner balance sheet and a better corporate governance is Interglobe Aviation. So I think that is what one should look at.
All right, Rahul, thanks so much for joining in. You've given us perspective on quite a few stocks, and pleasure speaking with you. All right, viewers, there you have it. That was a list of stocks that we discussed on Stocks in Focus. But there's lots more coming up over the course of the day. You'll find all of that right here on VQ Prime. Stay tuned.
How do you make the most of the India opportunity as an investor? For that answer, all roads lead to BKC in Mumbai on the 13th of July. Three big money managers describe the size of this opportunity. Two of the largest mutual fund CIOs then tell you about the mega trends that they're investing in. Will the current capex cycle be similar to the one between 2003 and 2008? We get that answer from Sanjeev Sharma of ABB in a conversation with veteran investor Madhusudan Kela. And then we rounded off with two of the most prominent investing names talking about how to make the large bets and make it really big. All of this and more at the Trident Hotel in BKC on the 13th of July. Catch the action live on VQ Prime.